You are staring at a screen filled with lines, waiting for a single price alert to trigger. When it finally goes off, it's a scramble of manual clicking, drawing tools, and disorganized charts. You then have to figure out your lot size, doing mental math, to match your stop loss against your current account balance before you actually place the trade. This delay creates what we call the execution gap. While you are switching applications and punching numbers into a calculator, the price is actively moving against you. In the 2026 market, you are competing against centaurs, hybrid traders who merge their human intuition with the speed of algorithmic precision. Treating your charting platform like a digital coloring book creates a bottleneck. To stay competitive, you have to engineer your interface into a high-performance command center. The foundation of that command center is the data itself. Standard retail broker feeds display false price wicks and stop runs that only reflect that specific broker's internal liquidity, a flaw known as broker noise. The left candlestick chart shows a volatile price spike piercing support. That's broker noise. The right chart shows the same asset cleanly respecting that line. For an accurate view, you must use institutional, aggregate data feeds like ICE or Saxo. Currencies aren't traded in isolation. These stacked graphs map U.S. Treasury yields, the dollar index, and the S&P 500. Syncing them reveals weaknesses. A crosshair locks across all three, highlighting an anomaly, a yield drop the dollar ignores. This is SMT divergence. Without high-fidelity inputs and this level of intermarket correlation, you are making decisions based on optical illusions rather than the reality of the market. Once the data is accurate, you need to fix the execution gap. The solution to manual risk math is the long-short position tool. This diagram illustrates the risk tool over a standard candlestick chart. You input your account size and your risk percentage into the settings. Now, as the stop-loss border is dragged, the floating panel automatically recalculates your exact lot size in real time. To manage your analysis across multiple timeframes, you use the object tree and visibility toggles. This ensures your weekly structural drawings stay hidden when you drop down to a 1-minute chart for execution. Next, we apply centaur logic to our indicators. We move away from basic predictive buy and sell bots and toward open-source scripts that highlight structural confluence, like a session volume profile showing where the most business was transacted. To prevent alert fatigue, you can configure multi-condition alerts. This means the system only notifies you when the price crosses your level and an indicator reaches an extreme at the exact same time. Automating risk parameters and logic-based alerts frees up your cognitive capacity. You no longer worry about math. You focus entirely on executing high-probability setups. The final piece of the command center is routing your analytical interface directly into your brokerage execution platform, bypassing manual terminal entry. This flowchart shows how webhooks function as a bridge. An alert triggers on your chart. The system converts it into a bracketed JSON data packet, and that packet travels instantly to your broker interface to open the trade. You can also optimize your mobile push notifications with specific syntax. This sends the exact trade parameters, entry, stop loss, and target, straight to your locked phone screen. Implementing webhook automation removes the manual entry step, so the price you analyzed on the screen is the price executed in the market. Before risking capital on this system, you have to test it. Standard backtesting has a flaw. Hindsight bias tricks your brain into justifying why past chart movements were obvious. We solve this with the forward testing protocol, using the bar replay tool to simulate the pressure of a live market. You jump blindly to a random historical date, then advance the chart strictly candle by candle. You log every decision in a journal as it happens, with no knowledge of what comes next. By following this protocol, you move away from reactive chart reading and toward the professional standard, an integrated system of high-fidelity data, automated risk management, and webhook execution. Download the FXNX Command Center checklist to audit your own setup, then open a zero-spread NX1 account to integrate your newly engineered charting interface with a high-speed broker platform.